Okay. All right. Hopefully everyone can see that layout. And let's get started. So today we're going to be talking about how to turn capital into cash flow, talking about our new fund that we're launching that has a fixed 8.5% fixed passive income. So that's a monthly basis. We'll get into all the details, but first, let me get into our official agenda and we'll get started. So today we're going to go over the investor challenge of the current market, what investors are really looking for, and then our answer, which is our new fund called the Investor First Fund. We're going to talk about how the fund actually works, what makes us different, a little bit about how we've done over the years, and then we'll have a Q&A session for any questions that are out there. And feel free through the presentation to go ahead and type a question to chat. I should see it pop up and then be able to answer it directly. So with that, well, let's go. So first off, I have just a little bit of a technical issue. There we go. A little bit about us as a company. As I had said, we are a lender. We are in the private credit space. We put out about $800 million of capital, investor capital, since inception. We manage about $180 million of investor capital right now. And I've been doing this for a while. I didn't have any gray hair when I started back in 2007. I'm fighting the good fight right now. But we've got a great team. We've been in Austin the entire time, experts at the Central Texas real estate markets. And that is the place that we make money for investors. So let's get started about what investors are facing right now. This is the challenge today, is what's the market going to do? What are my investments going to do? It's always about volatility. The stock market has had a good week after a poor week, after a good quarter, after a bad quarter. And if you look at the markets from this last year, they have been very unpredictable. If you look at interest rates, they shot up, they've come down a little bit, and now they're flat, but predictions are they're going to be coming down, which is going to affect savings rates. For those people that are in rental properties, rents have gone up, they've gone down, they're a little bit steady, and then seem to be falling again. The point is, there's a lot of volatility in the market. And for some investors that are in their prime earning years, that may be just fine. It may not be an issue. For other investors who are really looking for stability inside of their portfolio, it can be a problem. We're looking at this, and what we're seeing is that investors really do prefer consistent, reliable performance. And if it can come on a monthly basis, that's a really big deal, especially for people that are in their retirement years. Helping with extra income or turning their nest egg into income is a really big deal for them. So it does help, especially when we have inflation that's still out there. Being able to earn a great rate of return makes a big deal on a monthly basis. Security, transparency, and really simplicity. If something just works the way that it's supposed to, that doesn't always happen in investments, but if something works the way that it's supposed to, it's really something that's refreshing and can be a big leg up when you know that you can count on something. Confidence and fund manager availability. And that's one of the things that really does set us apart. A lot of people have a registered investment advisor or an advisor that they can call and they can discuss their portfolio, but not many people have a team that they can call that are making the investments directly, that are actually going out there, doing the work, and producing yield for investors. And that's one thing that is available with us. And a lot of people are looking for that direct connection where they can really figure out what's going on and have someone that is really in the market to try to figure out what's going to happen next. So that is really what we've seen with the feedback that we've received from our investors and investors that are looking at investing with us is predictability, stability, something behind my investment that holds its value, being able to get with the manager. And so we put all of those desires into our new Investor First Fund. We're going to start with the basics, high level, then we'll go a little bit deeper. But the headline is 8.5% fixed return. And that's an annual yield that is paid monthly. Now, this fund is for accredited investors only. So there are requirements. It's not for everybody. But for those people that are accredited investors, the minimum investment is $100,000. That may seem high, but for a private fund, for a private investment, that's actually a little bit on the low side. So we're trying to make it open to everybody. That comes with a 12-month commitment. But the power of this fund is that every investment that we make is backed up by real estate. And what that equates to is a check or an ACH or a wire every month on time at 8.5%. We're going to get into our strategy, how we secure things, but the idea behind it is strong yield, 8.5%, great wealth preservation because of how we invest the money, and knowing that it is a 12-month commitment, but liquidity when you need it. So 3 elements: yield, security, your money when you need it. So let's get into some of the details that I'm happy to go over. So the first is our investment strategy. We produce yield by lending money out on real estate, almost like a little bank, in the sense of people come to us, they're looking to borrow money to typically build real estate. It might be homes, it might be apartments, it might be office or commercial. And we're looking at projects in the on the Interstate 35 corridor. So we're located in Austin, Texas. Hook 'em horns for those that know about the Longhorns, #1 team in the nation right now on college football. We'll see if that stays that way after the big game that we have this weekend. But anyway, we're in Austin. We lend up to Dallas, Fort Worth area, and south to San Antonio. That is our target zone. That's where you have a ton of growth, a lot of business activity, and it's a really strong real estate market. We're lending into that, charging a strong interest rate, and then taking that interest and any fees that are coming off of those loans, putting that into the fund and paying that out to the investors. So there's always a real estate property that backs up the loans we're making, just like any bank does, so that we have that stability that comes from the value of that property that backs up our investment. That's what sets us apart from a lot of the other investments that are out there in the traditional markets, where there's not collateral that's behind the investment that we're making. Then if you look at what type of properties, right? We talked about where, the I-35 corridor in Texas. If you look at what we're putting the money into, what we're loaning against, most of it is single family homes. Builders come to us, developers come to us, they'll show us a project sorry, I'm just letting someone in. They'll show us a project that they want to build. We will come to terms on that project, and then we will lend them the money over time. It's construction or value add to build that project. So as you see with a small chart, most of that is in single family homes. Some of that is in multifamily or apartments. Some of that is in commercial property, like retail centers or office buildings that produce monthly income. And then a little bit of it is in land in urban infill areas. That is going to be land in the path of progress where someone might want to go in and put a housing development or apartments or commercial office buildings. We like to have a little bit in each of those areas, but our big emphasis right now is in housing because the housing market is strong in Central Texas. A lot of people are still moving here. We'll get to some of those stats later, but it's a great place to be able to put down a good residential product and sell it on the other side. So let's go into a little bit more of how the fund works. We talked a little bit about this, but the fund lends out money. So that's the investor first fund as the lender after borrowers come to us. That money is lent out, and as that money is lent, borrowers who own the real estate are paying a mortgage payment every month, just like you would with your own home. So they're making that interest payment, and that is going to the fund. They're also paying an origination fee when the loan starts, and there might be other small fees associated with the operation of that loan. Through that process, they are usually going to be building a house or building apartments, maybe an office building, and all the while making payments to the investors. As those payments are coming in, that is generating income for the fund And that is what is making those monthly distributions at an 8.5% rate to our investors. What happens through that project is once the project is built, then it's typically going to be sold to a homeowner or an end user, or it may be refinanced with another bank or another lender. Either way, that money is paid off. And then as that money is paid off, it is then recycled into another loan, and then the cycle continues. But the simple side of it is the fund makes a loan, the borrower makes payments, those payments are converted into income for the fund, and then that income is distributed out every month to the fund investors. That's a system that we've been using now for almost 20 years in our other funds and even direct investments. And that's a system that we've seen work really well because you know what's coming in on those monthly payments from the borrowers. In this fund, you know what that payment is to the investors, and you can see and visit that property that's down the street, or at least for us, within about 3 hours, unless it's in Austin, could be just 5 minutes away, could be up to about 3 hours away, but we can get to it, we can see it, we can monitor the progress, and it's a tangible asset that backs up our loan, just like people have been doing for thousands of years when they're lending against real estate. Now, we're going to talk a little bit about how we look at the loans that we're making. And this is a very simplistic view, but this is what happens when a borrower comes in, puts in an application, sends us information about their project. We're looking at value. Well, we get appraisals, we do internal opinions to say, what's the value of this project? What's the value of it now? What's the value of it when it's completed? We make sure that it's supported, reasonable, and provable. We're looking at marketability. How viable is this project? Does someone want to buy it? Does it make sense if it's commercial? Is it well located? Value is one thing, but marketability is another. We're looking at the borrower's ability to pay. Are they making money from the project? What's their day-to-day job, perhaps, or what do their company financials look like? What's important for us is that we can see that they're able to service the debt over the course of the loan. And then we're looking at the exit strategy, which is how are they going to pay us off? Because we only want to make a loan if the borrower is then able to pay us off. So the exit strategy is typically going to be property sale, but it could be a refinance with the bank. And if it's that case, and we want to see that they already have banking relationships, and if they build this building and maybe get it occupied, will they have that refinance on the backside? So we just want to make sure that the plan makes sense. Value, marketability, can the borrower service the debt over the course of the loan? And then what is the eventual exit? Does it make sense? And if it's a project that makes sense, that's a project that we want to lend on. And because we're lending very close to home, we know the markets really well. And that's a big deal for us. That's why everything that we do is within about 3 hours, and everything that we do is along I-35, so we can get to it quickly, know the markets, have expertise. And if there is an issue with the loan, then we can get to the property quickly, ascertain what the issue is, and fix it so that the investors don't have to worry about it. A little bit about the company. Just going to take a quick sip. Again, been in business since 2007. We have a loan origination department. Loan origination is where people are coming in, applying for the loan. We're doing underwriting, really figuring out all the factors in a detailed way that we just went over. We have a loan servicing team, and they're the people that take the payments every month. They might make construction draws out to the borrower if they're building something, keeping all of the accounting straight. We have a portfolio management team that's looking at the entire portfolio of the fund, making sure that we're following the right strategy, looking at the market, any changes in the market, really asking that question, where's the best place to lend money right now? And then we have the fund administration department, which is the back office accounting, keeping everything straight, making sure the distributions are going out on time, making sure that everything is just right, and then rolling up to our audit team as well, because we are audited every year as a fund, making sure that everything lines up. And of course, all of that is available to our investors. It's important, though, to have a great team all in one place so that we know the loans that we're underwriting, the loans that we're making, We monitor them and have great relationships in the servicing side, making sure that we are following the right strategy with portfolio management and buttoning everything up on the fund administration and on the audit side. So everyone's here. In fact, everyone's in our headquarters, except, of course, our audit team, which is a third-party auditor. And we do have a third-party fund administrator as well. But everyone else is within our headquarters in Austin, Texas. It's important, I feel like, for everyone to be on the same page and in the same place so that communication can happen. So we've been talking about loans, we've been talking about property. We're going to be going into just some light details. These are all projects that we financed in the past, new builds, properties in Austin, properties in Dallas, San Antonio, New Braunfels, and San Marcos, which is in between Dallas and San Antonio, even Waco. But these are the types of projects that we're financing. Usually new builds that we're working with experienced builders, usually very nice because they're not necessarily high-end luxury, but usually mid-tier luxury priced from $500,000 to maybe $1 million or $2 million on the end result, sometimes a little bit higher than that. But we want to work with people that have done it before, that we can go out to their properties now. Obviously, we're looking at their financials, valuations, everything else, but I want to be able to see that they know what they're doing and they can put a great product up. So just a few examples of some properties, some loans that we have in Austin, Dallas, and Highland Park, which is also Dallas. You see a loan of 4.3 million, 1.84 million, a million, 2 million. We can get into the details of it, but these are mostly construction loans, sometimes for one property, usually for 3 to 4 to 5, so we can stay in that price point of $1 million to $2 million. They're great areas, Highland Park especially great, Austin, strong real estate market, beautiful place. Dallas, a lot of things are happening in Dallas. People are coming in, a lot of headquarters are relocated to Dallas. But this is just an idea. Also on the screen, you'll see first lien. First lien is super important. What that means is that we as a lender are in the first position, the senior secured position. And that's true for all of our loans. That means no one is lending money on the property before us. We have that first right. So if something doesn't work out with the property, then we can be in control. And if things don't go well and we're forced to, we have to foreclose on the property. We can do that with a first lien. But what we're doing when that happens is we're exchanging the loan that we have for the property. And the types of loans we're lending against, we haven't really talked about loan to value ratio, but we limit our risk with loan to values. You see at the bottom, that bottom row, we're talking about 69% says ARV or LTV, 69% loan to value, 66, 60. What that means is we're lending 60%, 65%, up to 70% of the value of the property. So if the house is worth $1 million, we would lend 700,000. We like to have that buffer for security in the investment so that if the worst case does happen, and we do have to take that property back, we should have more value in that property than what we've loaned out. And that way we should be able to recover that principal and keep the fund moving along well and keeping that return up. So some examples of the loans that we've done in Austin and Central Texas areas. Now we're going to move on to the Texas Advantage. Lots of little stats about Texas, but Texas is growing. It's been growing. It's going to keep growing. In fact, we're in a little competition right now with California, California being the most populous state. The demographers are telling us that by 2045, and this is an estimate, but by 2045, Texas will become the most populous state in the nation, which is a big deal. And the reason they're saying that is they're looking at the inflow of people that are coming in, and most of those people are coming into what's called the Texas Triangle. In the north, you have Dallas, Austin, Central, San Antonio in the south, Houston in the east. Houston's a great city, but I think the best real estate markets are along I-35, as I've said before. And we have three big cities, and there's so much growth in between Austin and San Antonio. New Braunfels, San Marcos, Buda, that's almost one big city in and of itself. But people are coming here, the jobs are here, it's still relatively affordable. And that helps for real estate appreciation and stability. And that's what we want to see for our strategies to work well. We're looking for a stable real estate market. We don't have to have something that's appreciating, but just something that's predictable, stable, so that we can lend money into it and get a regular rate of return for our investors. So Texas is a great place. We also have great laws for lenders. And when we do have to go through a default process that could eventually end in foreclosure, it actually is a fast process, about 2 to 2.5 months in most situations. And that's a far cry from a lot of the other states across the nation where a foreclosure or a default situation can take months or sometimes even years. It's very lender friendly in Texas. That's why it's a great place to do business, a great place to invest in real estate, and a great place like us to lend on real estate. So a summary of the fund. This is the manager, Stallion Capital Management, been around for a while. Our newest fund, the Investor First Fund, launching it in September, target return of 8.5% fixed. That is not a guarantee. There's no guarantees in what we do, but we've been doing this a while and we know how to run a fund, and we are putting that as a fixed rate. We're not going to be making anything as investment managers until that 8.5% monthly return to our investors is paid. It's only then, after that's paid, that we charge any fees or take any type of performance after the investor is paid. That's why it is called the Investor First Fund. Liquidity, as we talked about, 12 months. That means that if you're making an investment into the fund, we want a 12-month commitment, and then you can request your funds back after that 12 months. And the reason that we do that is that the underlying assets, the loans we're making, are typically 12 months, sometimes 18 months. So we want to have a match between the investment period and the loan term. Make sure that that aligns well. So 12-month commitment period, minimum investment, $100,000. And again, you do have to be an accredited investor to invest in this fund. Again, no fees or anything taken to the manager until after that 8.5% is paid to the investor. And then we are going to be audited every year by Fraser and Dieter. They're a tax and audit firm that we've worked with for years. They have a great staff, very detailed. They make sure that we're doing a good job for our investors. So again, who is this fund really built for? It's built for people that they need to be accredited investors. People can use their IRA capital, they can use regular checking account money, but it's for people who really want stability and predictability. It's people who can look at an 8.5% return every year and say, that makes sense. The big difference between this and other fixed options that you might see in the market, like annuities, is you can always get your money back, unlike an annuity contract or anything else. There's no surrender fee with us. It's just a monthly check that goes out. And then when you're ready to redeem your shares, you make a redemption request. We ask for 60 days to process it, and then the account goes back to you. We have full online access for all of our accounts. And we're on Fidelity and Schwab on their platform with our other funds, and this new fund will be on the platforms as well. So you can buy directly off of Fidelity or Schwab, or you can have your financial professional buy the fund for you. Most of our investors come directly to us, though, and that process looks like they get a subscription document and what's called a private placement memorandum that explains in detail everything about how the fund is operated, how we make money for our investors, how the management is compensated, and just kind of the rules of the investment. So happy to send that over for anyone that's interested today. And then a little bit of Q&A. And this is where I would encourage anyone who might have a question to jump on. You can unmute, ask the question if you'd like, or type it in. I'm not going to go through all of these questions, but maybe just a few. How are deals selected? That's usually a question we get. Deals are selected by us going out and looking at people in the real estate market and saying, who's doing a great job? We want to work with that person. Or it might be networking events. It could be brokers that bring loans to us, but we have plenty of requests for capital. It's our job then to say which loan request do we want to approve and fund, which do we want to deny and pass off to other lenders. But we do have plenty of deal flow coming in with people who want to borrow money. What type of return should I expect? 8.5%, every year, paid monthly. What are the fees associated with it? Well, Stallion Capital only makes a management fee or only makes return once that 8.5% is paid. So you're paid first, we make fees on the backside. So that 8.5% is a true net number. There's nothing that comes out of that for the company. That 8.5% is for the investor. Is there liquidity? There is liquidity, but this is a private investment. And this is not something that's where you can request funds at any point. There is a 12-month lockup period, and then there is usually 60 days that we're asking to take that money out of the fund and then send it back. So that is a downside of what we do, but we want to be ready to have that liquidity for you when you need it. And then can I speak to someone before investing? Of course. In fact, you cannot invest without speaking to someone on our team, whether that's me or another one of our representatives. If you're interested in what you've heard today, we can set up a second meeting, either in person if you're in Texas or via Zoom, just like this. We'd like to know who you are, make sure that this is an appropriate investment for you, give you more details about what we do, and send over our documentation. And then, if both of us feel that it's right, and you really understand our methodology and how we're making money for you, then great, come in. It's an easy process, but it's one where we want to be thorough to make sure that this is an appropriate investment for you. So moving on, and anyone who wants a copy of this Q&A is welcome to. And again, if you have a question that you want to ask, now would be a great time. I'm just going to keep rolling through the presentation for now. And that's really the last piece. So I would encourage anyone who is interested in moving forward. It doesn't mean you're committing to coming in, but it does mean that you want more information and to set up a meeting or a call. You can pre-register at that QR code. You can scan that with your phone. You can send an email to vincent@stallioncap.com, or you can go through the links in your webinar invitation. We'd be happy to get back with you, set up a meeting, like I said, either in person or on Zoom, and ask any questions